Hi everyone who's joined us today. Thank you so much for joining a LeadSquared roundtable, a virtual roundtable. So we're discussing today the evolving landscape of lending. As you can see, I have esteemed speakers today who collectively have over 100 years of experience in the lending space, or
I'm still young.
yeah. So just to give a quick introduction for our speakers today, and yeah, before I forget, I often forget to do this. I am Shivani Roy, and I work for the marketing team at LeadSquared. So introducing our panelists today, we have Mr. Anup Agarwal. He is the Chief Risk Officer at Poonawalla Finance. Then we have Mr. Anuj Sachdev, who is the co-founder Qbera and advisor at InCred. We also have Mr. Goutham KS, who's the head of information technology at Auxilo. We have Mr. Sivaram, who is the co-founder and CEO at Finwisely Fintech. And we have Mr. Nilesh Patel, who is the co-founder and CEO at LeadSquared. So, gentlemen, I will disappear for a bit. Before I go, quick tip to everyone who's joined in. So, guys, you can post your questions here. As you can see on your right, you have chat questions. So keep your questions coming. We are also live on social platforms. So Twitter, use the hashtag LeadSquared Roundtable. Put your questions, comments, feedback, whatever you want, positive, negative. We're here to listen. So put whatever you want over there. Over to you, gentlemen. I'm going to disappear for a bit.
Thank you, Shivani. Thank you so much for getting this started. Really appreciate it.
Thank you.
And thank you all the panelists here for joining in this wonderful session today we have on the digital transformation for lending. And thank you, Anup. Thank you, Anuj. Thank you, Sivaram. And thank you, Goutham, for joining us today. I think would like to spend this time trying to look at various aspects of the digital lending, digital transformation, and the lending, the whole digital, the impact of digital on the lending ecosystem. And obviously, COVID is the hot topic today. So we'll talk about its current limited impact or whatever impact it has on the ecosystem players. And basically, make it really valuable for our audience, so that they can hear it directly from you all in terms of what you are seeing, what actions are you taking, and what are the methods they can adopt and learn, and basically deploy in their own respective businesses. So I have 4 or 5 items I'd like to talk about, and then maybe we can go around and talk about those. So I'll start. So I'll give a quick brief about each of you, and then maybe we can drive as Shivani already pointed out. So I think I'll start with Anuj, right? Anuj, I think you've been one of the key technology adopters and drivers in the personal lending side on Qbera, right? So I think since the time you started this company along with your partner, and whatever you have observed and seen in the whole digital lending side, right? What has been your observations, learnings, and the customer side impact of the technology and digital transformation for your lending business, and whatever you have observed? Would love to hear from you in these last few years, how it has started and changed, and where do you see it getting evolved from here on?
Sure. So I'll just give a quick introduction about Qbera. We started the company in 2016 with the aim of simplifying a couple of things, couple of issues in the consumer lending space. A lot of us get calls from call centers to take loans, but the reality is that there's a very large section of the market which is underserved which was underserved by the incumbent banks and NBFCs. So I can go deeper into the issues that we were trying to solve, but maybe I'll leave that for another day. The main thing that we've observed when we started the company and we went along the journey, and now that we've hit COVID, is that lending as a business needs to be very agile. Your systems need to be very agile. You should be able to change your processes on the fly to be able to adapt to your customers' needs. And we've done that since the beginning. And going into COVID, we've had to repurpose a lot of our teams, working from homes. There's no business happening, so we've shifted almost everybody to customer service and collections. So overall, we've had a we've tried to create a very agile sort of a lending system, and that's been the biggest learning in the last 4 years. Because if you don't have an agile system, there are so many opportunities out there that you miss out. Whereas if you are able to be flexible, work with a lot of different partners, different use cases, different customer pain points that you can solve, that has been the biggest learning for us.
Okay, so from did you also see the and I'll get Sivaram sort of plugged into this question. So as things have evolved, right, and obviously COVID is like a step function in between, right? I mean, things change drastically after this, but the expectations on the customer side to drive the whole the experience from a lending standpoint, like how's that evolved, and what have you observed in terms of actions being taken by financial institutions to adopt to to serve the growing and the emerging needs of the customer?
I think it's funny these days. The banks call themselves as technology companies, and the technology companies call themselves as media companies.
That's true.
Yeah. So yeah, there's been a great adoption of technologies in the banking side, and it's not that banks are as I would say as agile as probably as the new age fintechs are when it comes to offering the cutting edge products to the customers. Look at the way the video KYC was lapped up by the banking system. So I think there is enough and more that the banks are also doing to come up and serve the customers better. Yes, having said this, COVID has kind of there is an impact on the supply and demand side because of the COVID. We will see more and more things evolving, and more than the digital transformation, I think what matters to the lending institutions today are how robust are their credit policies, and how agile, more than the customer acquisition and customer servicing side. I think what kind of agility they demonstrate on the credit space, because every month is going to be a new learning, because we've seen coming in and close to 39% of the lending is under moratorium today. So actually it's anybody's guess as to how the customer would behave post the moratorium is opened up. So I think the agility which Anuj was talking about, we see more of that in the credit appraisal and the credit processes side.
So are you saying, and maybe I can turn this over to Anup, and if you can just do a short introduction about your company. I'm sorry, Sivaram, I didn't recall that when I gave you the chance to speak. But Anup, when we talk about the credit which Sivaram mentioned, right, the assessment of the credit worthiness of the client, right, is what is going to be very important as we move on. So which kind of brings in me the point of view that, look, you have there's a customer which walks in, but I need to give a loan. Now there are two things, right? The customer is not credit worthy, doesn't get a loan, nobody's hurt, right? That guy was not going to get a loan anyway, right? But if there's a customer who's credit worthy, now you make him wait for 7 days, 15 days, or whatever time to give him a loan, then you have a likelihood of losing that customer to another institution who may give them a loan. So on the point which Anuj mentioned and which Sivaram highlighted, what are you observing, or what are you doing in your own company to sort of drive the whole turnaround time for credit-worthy borrowers, and sort of and making sure that you are faster than other people?
Yeah, thank you, Nilesh. So Nilesh, the entire premise with which Poonawalla Finance was set up was transparency. We wanted to bring transparency in lending. We wanted to have a delightful experience for the customer with the help of least documentation and the quicker tag. So we say that we'll be giving an approval in less than 2 working days as well. And the process has to be very seamless. The process has to be very quick. and it has to be as much. And with the current situation, we are trying to build our own digital stuff as well, with which we can cater to the requirements of the customer. SME segment, they are a very time-bound people. They need a loan at a particular point of time. If they get the loan, they can absorb it, they can consume it, and they can multiply it in 2x, 3x. If there is a delay in delivery of such funds, then it's like justice delayed is as good as justice deferred.
So from and I'll have a follow-on question. So from a obviously there's this balance between turnaround time to give it faster, which sometimes is a bureaucratic issue as well, because some guy is sitting on a file on the credit side looking at 500 things before giving a loan and asking a lot of questions. And obviously you don't want to give a loan to somebody who is not creditworthy, right? So how are you drawing the balance in that process, and what have you done, or what are you trying to do? And obviously, as every business evolves, there will be things which you're trying to improve. But what have you done proactively to say, look, I want to make sure that the creditworthy borrowers, like from a system standpoint, are you driving integrations in your process? What steps have you taken to sort of reduce the turnaround time, at the same time not issue loans to the which are borrowers which are not creditworthy?
Yeah. So what we have tried to do is that we have broken down the entire customer life journey, and we are trying to make it as much as automated as possible. So the manual intervention is to the minimalistic. So the system will be telling me whether a customer, me being the risk officer, I have also ensured that the policy has been framed in such a manner that it is conducive for quicker decisions.
Okay.
The quicker decisions with which my credit team can also take the decision whether a particular borrower is credit worthy or not. Whatever be the decision, be it a yes or a no, the customer has to be serviced and they have to be told whether the loan is being approved or not. So we have tried to do that as much as constituents of appraisal process is automated.
So, if I look at it, the way you described, so are you also keeping the customer informed at every step of the process, whether they'll be, where they are from a borrowing, from a lending decision standpoint? Like, is that something which you do proactively?
Correct.
Okay, absolutely. Very nice. So I'll maybe now go to Goutham and basically, Goutham, if you can just introduce yourself, and then also sort of I think one aspect which probably a lot of people talk less about, and is really the whole compliance angle, right? I mean, whole operational angle in terms of what are the challenges one should proactively hunt and solve in running a lending business, so that you are reducing the risk of compliance, and especially in the new times, right, when people are working from home. So what has been your learnings, and have been things which you have done well in the past, which has come to your rescue in the new environment?
Yeah. Good evening, everybody. Thanks, Nilesh, for making this a beautiful platform to share our views and thoughts to the audience and share our experiences. Myself, I'm Goutham. I handle IT and Auxilo Finserve. We are just more than 2 years old company. We're basically into education loan lending, starting from school to higher education, including any country in the world, in a sort of approval per se. Now, the current situation, coming to your question, I will say that is just like a small, what you can say, a small pyramid type. What happens, these are 4 things: time, quality, cost, and compliance. At the end, what you get the business result. These 4 keep on moving in a rotation basing on the situation. Example, a COVID situation, what happens? Without spending money, cost, without impacting my business process, my entire compliance also has to be there, because everybody is working digitally, including the employees, not the customer.
Yep.
Rather, more than customer, all employees are working from home. That means you are on digital, which you used to do on paper, you also do in here. Whether your systems are ready or not does not matter, because the nature, the COVID has demanded everybody to overnight shift to the change. So that people have somebody already adapted and they could make it up. Somebody learned. So that is also one of the change. And one more thing is in the entire this current scenario, whoever is whatever the technology we have done, both the parties, including the technology developer, just like Anuj also giving a lot of new ideas because the entire their talent skill will come into that only. How to adapt this, make it more swift solutions. And the same time from the lending point of also how this my processor are being changed to ensure customer not impacted. So in this is four: cost, time, quality, plus compliance without compromising the business. So these 4+1 is making us the journey just like a round table. You're just a musical chair. You keep on catch the chair.
So let me ask you another question.
Yeah, of course.
So are you getting a good sleep now, being a IT head at Auxilo? Like, given
if you say, in fact, last night I did not sleep at all. Morning only I had just half an hour sleep. So because of I have to commit something and I have to deliver also. So I had a problem, and morning I had some link problem. Enter Kurla, there was a Tata link was problem. It's a practical.
Okay.
So enter our area that there was a fiber cut. I don't know in the COVID who has got the fiber cut. I don't know. So there was a 1.5 hour thing. Then I have to switch to VPN was not working. Then I switched to secondary line. Again switch back to main line. So almost 2.5 hours we was coordinating. So these are practical problems. Otherwise, what happened? Entire work from home. People have started calling me apart from my team. So because they've tried for 30 minutes, 20 minutes. So fortunately, what happens? So this is the practical problems.
This is the reality of the business, right? Absolutely.
It's the reality of the problem. Because of what has happened, my approvals, my disbursal, my scanning, entire thing gone for a toss. If it would have been office, we would have taken alternative. So that is the thing. But this is a learning.
Absolutely. No, fantastic. Now let me turn this questionnaire around and go back to Anuj for a moment, and then we'll probably and you guys, you all please feel free to intervene if you have a point of view. I think in this all tough environment, like obviously LeadSquared is a customer acquisition engine, right? And so what I'm thinking right now is how to find the credit-worthy borrowers, right? Anuj, so what are you thinking? Like, and how do you find that person who is credit-worthy and on which you all can make money?
Right. I'll share a practical example with all of you, and Nilesh, because you're not from the lending industry, you'll find this very bizarre, actually.
I'm paying my EMIs, by the way.
That's actually a good thing. That's the point I was mentioning.
No, I wanted to mention it desperately because I just want to make sure anybody who is not paying their EMIs will be in trouble. So,
I've been hearing from some very large lenders, from the risk teams, that, and we work as a platform, so we work with multiple balance sheets, whether it could be a bank or an NBFC. And I'm hearing from the risk teams of large institutions that if, let's say, you've opted for the moratorium during this period, regardless of your other parameters, you will not be eligible for a loan. That's a blanket rule for the foreseeable future. Now imagine this.
You're right. I knew this.
There are a lot of good customers out there who are opting for moratorium, who are who can service the EMIs, but they are opting for the moratorium just because it puts more cash for a few more months in the pocket, right? So you have good guys who are capable of repaying, have taken moratorium, but there is guys, in some large institutions are saying that if you take a moratorium, we are not going to make you eligible for a loan. And that's just a small piece. And going back to what your question was earlier regarding credit processes, this is a very small thing. As long as your systems are working on various parameters where data comes in from various sources, and you are agile enough to be able to change those parameters, how you let people in and how you let people out of your funnel, it's a big deal, right? Because today I may put in that rule where, which I've just mentioned, that if you've taken moratorium, you're not eligible, even if you are a good customer. But tomorrow the lender, the balance sheet owner may change his or her mind, right? And I have to change that instantly, overnight, right? So these are the certain things that, at least at Qbera, we do, right? We sort of make sure that every single data point is parameterized, which can be changed, on the fly,
time.
right? Going back to, let's say, in the 2008 era, there was this term called ninja loans, right? No income, no job, no asset, right? Loans were given to such people in US. Now, even in India and world over, you'll find people in the ninja category now. Right? There's no income, there's no job, there are no assets. Frankly, you cannot give a loan to them. If you do, you'll probably end up in the 2008 era, unless or until the economy revives and the jobs come back. And the other thing is that, the segment that is worst hit by all of this is the segment which is earning less than, let's say, 15,000, less than 20,000 rupees a month, because that segment does not have cash reserves.
Correct. To survive. To basically,
job loss, pay the living expenses, and pay EMIs. And there are a lot of lenders in the last 3 odd years in India, because of the whole fintech revolution in India. There are a lot of lenders in India, fintech guys who've sort of entered into that segment. And that segment is blowing up because a lot of these guys, blue collar workers, have gone home, right?
So let me ask you a follow-on question. So do you think those lenders will be in soup right now? As this thing unfolds, the COVID situation, people are opting for moratorium and some people won't end up paying at all, right? I mean, so do you think those lenders will fold up or get acquired, or like what's going to happen?
Unfortunately, I think that is what's going to happen. See, the thing is that if you have moratorium, if you're giving moratorium on our assets, as long as you're sort of getting moratorium on our liabilities and your assets hold up, it is fine, right? But if your assets are holding up, even if you get moratorium on from a liability side, it's not going to make sense, right? So it's going to be very tough, especially for the lenders that have given small ticket loans in the sub 20K income segment.
Okay. So then and I'll go to Sivaram. I mean, I think the whole idea of finding the worthy borrower, right? I mean, and a question came to my head, like, will it be a sort of a situation where people are going to go and compete and do the takeover? So the lender says, if you already have a loan, I know you're repaying, I want to take it over. So will that be a big, sort of a compete push? Or do you think there'll be enough borrowers available to hunt in the market where you can still loan and you can build the business, like, and where to find those guys? Like, I mean, literally.
So let me go, couple of quarters back to give you some perspective around. It's not that even before COVID, also we've been having a kind of a slow growth, if not recession. We've been experiencing a slow growth. We've had instances like automobile industry going slow. Then we've had instances wherein the entire telecom industry itself was in the jeopardy. So the banks are, be it banks or lending institutes, are a little worried on what's going to happen and how things are going to evolve. So under these circumstances, yes, one man's opportunity is the other man's challenge. That I take that point, but I think by and large, it's going to be conservatism that I see holding on for some more time. I don't see a huge rush amongst the lenders to chase, at least on the consumer side. At least on the consumer, because there's lots yet to be settled. One needs to understand how deep the problem is. I think only that will evolve probably a couple of quarters later.
But you're saying the asset-based loans will continue to be given, right?
Yeah.
The asset-based loans shouldn't have a problem as long as the borrower is willing to pay the whatever premium.
Nilesh, actually, there's a bit of concern there too, because if I have to talk about, say, mortgage business, which is asset-backed, okay, not sure how the real estate is going to behave. Not sure what kind of, because typically the credit guys will have their own metrics. There is a normal loan to value kind of borrowing in the normal circumstances, and there is a distressed value one would apply. So not sure as to how it's completely on the I would say the
philosophy of the lender.
Absolutely, profile of the vendor, of the borrower, and also on the what kind of cash comfort that the lender has
in terms of entertaining. Okay, got it.
Absolutely. So now balance sheet that holds.
Got it. No, I think that's fair point. Now let me switch the topic a bit and move to Anup. And obviously, and I'll maybe come back to the whole idea of finding a borrower later. But I think now you're in a different situation. You found a borrower who's not paying. Now you have to hunt him down to pay his EMIs, right? Which is the whole collections exercise, right? So what are you seeing? Do you think that the people who are spending, let's say, X dollars or X rupees on on the sales side to get the borrower are going to shift some of that money on the collection side? Like, do you see the allocation increasing on the collection side? And like, what are you doing in your own business, if you can share, in terms of how to drive up the collections?
Yes, absolutely, Nilesh. So augmentation of the collection infrastructure is of utmost importance right now. Given the current situation, one thing which I would really like to highlight is that unlike the earlier days, wherein the people are so used to getting loan waivers. So first time when a moratorium was being announced, the first mindset which people get is that it is not a moratorium, it is a waiver. I don't have to pay anything.
Which is not true. Yeah, which is not true.
Which is not true. This time, luckily, I think I remember very distinctly last time when the demonetization happened, there was some moratorium being offered. And somehow the people took it as a waiver, just like a farm loan waiver or something of those sorts. But this time, the government, all the lending institutions, they have taken some extra care to propagate and to educate the customers that this is not a waiver, it is a mere deferment. It is just so that your cash flows do not get strained because of the loss of income or reduction of income.
Got it.
So this time I believe that, so this time what I believe is that the people, at least they have got this sense and they are ensuring of availing a moratorium only when required. As Anuj mentioned, that there are a couple of people who do have the capability to pay, but still they have taken the moratorium. It is more to do with the, what shall I say, the liquidity issues. They just want to be play safe rather than be very compliant because their regulator has allowed them to do that. And if I take that as a process for credit assessment and for giving them loans, I believe that the 3 to 4 month period will not be a very good yardstick to judge a customer. What we see is the background and the history of the customer pre-COVID era as well. A person who was not delinquent earlier, the circumstances are such, I may give him that benefit of doubt. I will give him that rope of faith. But a customer who has not been very regular earlier and he continues to be in trouble during the COVID situation, then for such people, it is going to be a challenge.
So then from a collection side, as we, collection in my, the way I think about the collection process is very much like a sales process, right? The way you go and acquire a customer, you basically go and acquire, get your borrowings back, right? I mean, and it has to run like a sales process. You basically, and so from that angle, right? I mean, do you see increased allocation or what strategy changes are needed in this scenario? Or you say, look, we have the collection process set, and we'll just continue to do so? Because what I've heard in the market is some people who already have, let's say they have, I'm just making this number up, let's say there are 50 salespeople selling loans, right? And they had a collection staff of, let's say, 10 people, 10 to 15 people. Now what they're saying is, look, I'm going to move half of my salespeople to collections because, I don't want to sell, I'm not going to disburse as much loans, but I just want to make sure whatever I've disbursed, I want to collect back. So are you seeing any of that in your business or any other similar businesses in lending? Like the same collection, focus on collections?
The focus on collections is certainly going to be there. Currently, since the moratorium has been allowed till August, so for the next 2 months more, I'm not expecting the collections to pour in immediately. Okay. So on an average, if I look at the industry, so around 39 to 40% of the people are there of the entire loan book industry, wherein they have taken a moratorium. And on an average, if I look at, but again, it varies from banks to a small ticket size industries. So particularly the lenders who are in the smaller ticket size or maybe the MFI business, over there we have seen that around 90% of the borrowers have taken the moratorium. Whereas if I look for a mid-size NBFCs, this range may cater from 60 to 70%.
Okay.
And the balance people who have actually not opted for moratorium, they have been pretty disciplined in giving and paying their EMIs. So there has not been much of challenge for the people who have not opted for moratorium. The biggest challenge which I expect is the attitude of the people. A person who has not been paying for 6 months, his cash flows, he will get a habit of getting additional cash flows. So
And
for
they'll
him
spoil it.
into the habit of paying after August is something which has to be seen, and certainly then we will have to augment our entire collection infrastructure.
Understood. So you're basically, what you're saying is, look, because there's moratorium, there's government restrictions, I cannot just go and collect money because that's not allowed right now in certain parameters. So I'll wait and see how the borrower behaves, and based on that, I'm going to deploy my forces to drive up collection. That's a fair point. I'll quickly go to Goutham. You have an interesting portfolio of education loans, right? And given the situation with travel, right, people are not flying out. Do you see, because a lot of your potential customers are also going to be people who are basically taking loans, especially the student loans, who are opting for a degree in Australia or US or some European country maybe, right? And so what impact do you see on your business going forward, at least for this year, till the travel ban is around?
Okay. So being a technology guy, you are asking a business question, but I will answer it with digitally.
Okay.
Because education is a one which is education is not a need, or it is not a livelihood, or it is not a some type of business.
It's an aspiration.
Exactly. I'm coming to the same word, the aspiration. It is not all this thing. So aspiration only, the wind may change, but the target is not changed. I may change the direction. So that means I want to go to US. I may not be going, but if an intelligent candidate, if an intelligent student and hardworking, and he's very what you can say focused, he don't compromise. He will choose in India. So that is the first thing. Second thing, the people who are want to go, there could maybe one semester delay. There will be few months, but I don't think so any change will be there because of corona, because of lot of uncertainty, that small little bit fear, there is no clarity in across the world, that may be there for few months, but I don't think that we, because people already go and make their mind. Even we had a internal survey also, but people have that percentage of the going to further studies, going to abroad, I'm not saying going to further studies not going to change. So that means whether it is going for an abroad or in India does not matter. That is one. Second thing, one more thing is people who are want to do some specific courses which are there in abroad, whatever those things, the thinking, the unconventional courses or unsort of courses also will come out of this in the limelight because of this current situation. So that is also one of the good opportunity. The entire education ecosystem will have some type of shuffling, definitely.
And so on a follow-on question, and any of you can come in and answer that, Goutham, you as well. The reason I sort of open it for everyone is that, see, look, the education particularly is going for a transformational change, right? And LeadSquared has a lot of education customers, tech customers, and all of us individually as parents, as brothers, as an uncles, to whatever, to our kids in our own families, would have seen kids taking classes on computers, right? That's a huge change, right? Yes. Which also means that a lot of loans which were given to education institutions, right? So when you're looking at like a school loans or whatever, loans for procuring a bus or whatever, right? I mean, that industry is not going to grow a lot, right? Because people are not going to take a bus anymore to go to school. Or you come back and say, no, look, this is just temporary and it's not going to be like that. So I'd like to hear the point of view, whoever wants to come in, and just come in and respond. Because look, I'm as a parent, I'm asking this question myself. And I think the school my kid goes to, would probably be overcharging me if my wife has to spend 6 hours sitting in front of the computer, watching the kid. She's doing half of the job what the teacher does, right? Literally. So why as a parent you should pay a whole lot to the school for that beautiful building, right? So anyway, please come in. I mean, I'd love to hear, yeah.
If you talk about school education, that's a different thing. I won't comment on that, but you're right. Why should you pay so much now that the kid is not going to school and everything is available online? But there's a larger change that's happening in India and across the world, which is to do with skills development, right? You have education edtech companies coming up with the ISA model, income sharing agreement model.
Okay.
Then, the entire education model is changing, wherein as a student, you don't pay anything for the education, right? The education institution or the edtech company makes money as a cut from your future income. And unless and until you make a certain threshold, they don't make anything, right? So there are some really very interesting edtech models that are coming out. And going back to what Goutham was saying, if you just focus on the segment of higher studies, let's say post-graduation, because in India still, or even otherwise, graduation is still required. People still go for it. So once somebody has done, let's say, a bachelor's degree, there is not so much need to do a master's degree. You can just log on to some really good edtech platforms and pick up skills which are far better than just getting a degree. And there are platforms which will let you do that without incurring an upfront cost.
So what I hear from you, what you said, so 2 points, right? I mean, and we'll come to the school back because I think some of those loans may turn sour. But the income sharing model. So do you think a lender will come up and say, well, look, because you are educating this kid, I'm going to I'm going to pay for his education, and then I get to make money later. Or you're saying, look, I'm I'm an institution, I'm going to put all the bill and I'm going to take the cut in the income in future. So what's the role for the lender in this new in this new method, if any?
I think progressive lenders would see this as an opportunity, a very, very large opportunity, wherein the edtech company also needs to support its cash flows, right? So a lender will come in and support those cash flows today in return for future income. Because see, the thing is that even if you take an education loan from SBI today, right, the repayments start after you've graduated. So it's in a similar fashion, but instead of paying money to the student to pay to the university, here the lender can support the cash flow requirements of an edtech company on an income sharing agreement, right? So there will be progressive lenders. In fact, there are startups out of India that are doing this, and it is a very evolving, pretty interesting space.
No, very interesting point you said. I mean, the way you described it looks like if I invest directly in educating a student in some fashion, why do I spend money in building a nice complex, right? Because the return on that complex is not great as compared to somebody getting educated and start earning money, like becoming an earning asset, right? What do you think, Sivaram?
I mean, it's very interesting what Anuj has mentioned for me. The parallel that I can draw to this kind of a model is what happens in say invoice discounting. There is this company which is doing so and so business for its principal, and it's supposed to get its dues on so and so date, and those invoices are up for auctioning, and whoever finds it, whoever finds it the right fit, he pays the price for it, and then the customer and the customer and the borrower will kind of come to an agreement on that. So very, very interesting thought. Though I don't have much of knowledge in what the space which Anuj was talking about, this evolving, but I find that quite an exciting idea in terms of somebody backing up a bright child, and then expecting, and at the same time managing the cash flows are taking care for the lender. I think that's a very bright idea.
Absolutely, and I second your point. I think it's like it's almost like imagining a marketplace for where a student puts himself up. Absolutely. And somebody shows up and says, "Look, I'm going to lend you because I think you could generate income in future, which can pay off my my principal and some interest on top of it. That's a fantastic idea. Goutham, do you see that education loan business evolving in that way, given what you have seen in your past and at Auxilo?
Right now we are in the right now. I think though the discussion is for the table purpose is okay, but how it is going to evolve, just we have to see and watch.
Yeah, I think you're right, because
Yes.
it's easy to give money but difficult to collect.
Yes. So you have to think a lot before to put that business model. You think of yes.
Okay,
But not only to add to Anuj also, technologically also the entire the chain is going to do a reverse process. Who is going to initiate what? Suppose initially we used to say LeadSquared. The name itself is saying you will just make a lead and from there you start the journey. Now it will happen reverse also. I will rather than lead the way Anuj was saying, that also will come up, because this entire, though the basic business principle technology will be the same, but the flavors will change. The roles will get rotated. So in this space, the technology work will come up. The entire platform has to change. So are you ready for that? Because I don't think direct tools are available upfront. I can do start and work it. So Anuj is rightly said, people are interested. They're going to come up. Just a matter of few months, I believe it will come out where we are heading to. Now, right now, people are not driving the situation. Entire situation is driving us.
Understood. So I think what you're saying is the way it is going to evolve is somewhat unclear at this point, and I will fully agree with you, because I don't know how it's going to evolve, because the way stock market is behaving as if nothing has happened, right? I mean, it's silly at some point to
But
see
at the same time, on March 13th and 12th, market is overreacted. That is also there.
Correct. No, I'm just saying that the way it is kind of behaving, it looks like nothing has happened. Like life goes on. And
I'll give you
yeah.
I'll give you a small example. The putting to Anuj and everybody what you were saying, Anup, how this going to evolve. Example, you'll say I have two kids at home. They may have one TV and one small computer, laptop also. It depends on their affordability and need also. Now, if you see both the kids are there, both are parallelly running. Online classes are started. Now, even some people who can afford, they cannot even buy now. They don't know delivery of laptop right now. Second thing, even if they cannot afford, what is the future? Even phones also, all the people, though the bright student, even the family, they don't even have a smartphones, and everybody, na? So this also comes up. So that means the way you say the bright child lending coming to make him as also affordability also, there is this need will come up. People want to do this. From people used to take this as a gadget, as a luxury. Now that has become a necessity.
Yeah.
Vis-a-vis with the, you said that beautiful AC building, classrooms with the clean glass, everything. Vis-a-vis coming to, if I don't have a good bandwidth and good laptop, how can see even this this virtual time will happening because of that only.
Absolutely. So the definition of infrastructure has changed, literally,
Yes.
right? So it was what it was, a board and school and table and chair is now laptop.
That is the one thing. Second thing.
Absolutely.
That is the one. Second thing, across the universities, if you see, the entire UGC has given a special guidelines how to conduct the degree exams. They have given a special guidelines. It is not just like a prometric center. If everybody go to prometric centers, it will become corona effect. We don't have so many, like the way we don't have hospitals per 1,000 students, we don't have any centers. So it has to happen from at home only. If I want to write a 3 hours exam, is my bandwidth is compatible? I don't have any interruptions. How make the mood of writing after my hard work of so many months? Can I write the exam from a paper to directly computer based? Writing in once a year, one entrance exam is different. Running entire semester exams on online is different. So this also will come up. So do you have a bandwidth? So that bandwidth companies also, telecom companies have to come up much more reliable bandwidth. I'm not asking huge size of the bandwidth, reliability of the bandwidth. If I'm a 1 Mbps, 2 Mbps, the reliability has to be there.
Yeah, it should work. Absolutely.
It should work.
Absolutely.
So that means if I put it now, Nilesh, there's lot of points going to come up just before entering into that concept of that lending to the student in a different way.
There are many other things to do. Absolutely.
Infrastructure is to be thinking differently. Even I saw in the morning one ad. It is called Reboot or something. infrastructure at home, entire your laptop, set up everything for office creation. These are new innovative ideas. It's going to come up.
Absolutely. So now, given in the interest of time, I would quickly, draw, just one last question, and you all are free to just come in and respond to it, and then we can go to the the questions which people have asked. So, COVID as a situation, is it a threat for your business, or you see as an opportunity? And maybe if you can take 30 seconds to 45 seconds to respond to that, then we can go to the questions after that. Each of, maybe we can start with Anup.
Yeah, thank you, Nilesh. Nilesh, in this, I've got two thoughts. First thought is that I think that difficult situations are something which brings the best out of people. And secondly, I would say is that necessity is something which is the mother of all discovery and inventions.
Absolutely.
So if I go a little few years back, like demonetization, that was a revolution for Indian banking and the entire payment industry, because that is when the digitalization came to the forefront. And if I talk about the first digital thing which happened in India, that was back in 1992 when the Harshad Mehta scam happened. In that, the reason why I bring this point over here is that because of that scam, it actually shook the entire industry. And that is when in 1992, National Stock Exchange, NSE, was born. That was a thing wherein the first dematerialized electronic exchange was found in India. Until then, everything was paper-backed share certificates.
So
yeah, please.
Yeah. So given the magnitude of change which has happened,
Correct.
Where are you? Are you seeing it as a threat for your business, or you see as a beautiful opportunity to build a larger, better business?
I think it is going to be a very good opportunity for people, the people who are being transparent and the people who is going to survive. This is the time wherein you have to survive.
Absolutely.
This is the year wherein that is the idea is not to have the growth strategy. It will be the risk management strategy. It is not, this year is not going to be about growth and return on capital. This year is about return of capital. Being the lender, the money which has been given, I need my money to be back.
Correct. Absolutely. No, I think your point is valid. I think the unless you survive, there is no future. So the fact that you have to survive to see a future, and if you are in future, there is an opportunity to be there. So absolutely, very valid point. And return of capital, return on capital, or return of capital, I think that's a beautiful word I've got today. I'm going to use it in many contexts. Thank you so much, Anup. Anuj,
I think
the opportunity.
It really depends on the kind of segments to which you've lent in the past, right? So if you've lent to very low income segments, it may be a little difficult for you to come out of it.
Okay.
But from an opportunity point of view, as Anup was saying, product teams and technology teams, because there are no ongoing issues of real time business processing, people have gone back to the drawing board and trying to rewire the systems for for digital lending, right? Video KYC was announced some time back, and all the banks have sort of lapped it up, and because everybody has time to look at new things, new products, new technology that people can develop, right? That's one thing. And the other thing is that from an industry point of view, there was this quote going around starting from Silicon Valley to Bangalore that fintech or rather lending is a feature, right? So everybody would become a lender. Every company, whether it's an e-commerce company, food company, clothing company, automobile company, everybody would become a lender, right? And lending would become a feature. I think this has taught the world that lending cannot really be a feature, because collections is a very big.
It's not a feature. As long as collection becomes a feature.
Exactly. Because collection is a very big part. It's a full-time job, right? Now people are coming back and saying, no, lending is not a feature.
Not a feature. Awesome. No, very valid point. Sivaram, is it a threat or opportunity? Sivaram, can you hear me? Or I'm out?
I tend to agree with what Anup said. I see this as an opportunity only. Am I audible?
Yes, you are. Now you are. Yes.
Yeah. Okay. I tend to agree with what Anup said. I think there will be new opportunities. I think what needs to be clear is your opportunity discovery and exploitation process, which means that you got to be nimble in your whatever opportunities that you're discovering. You need to be nimble in them and fail fast. Learn from your failures and learn from your experiments fast, and then whatever is working for you, kind of just replicate. And that's what we are trying to do in our venture. So,
got it. So I think and I'll just turn it to Goutham before we open the questions from the audience. So Goutham, what's your take? This whole situation around COVID, do you see it as a threat or opportunity for your business?
I say in between. You have to this is a chance where you have to relearn from the situation, unlearn, relearn, and move ahead. Because education is the one because even I joined the company because of that only. Because all others, whatever the other business, whatever is there, they can be postponed, they can be dropped, they can be even entire thing is been vanished in the market. Whatever other industry, I don't want to name them. Okay, with due respect to them, but education is one which everybody, including who are there in this entire forum, everybody want their kids has to be highly educated.
Absolutely.
And even ourselves, we wanted to learn something. The way
Absolutely.
Anuj said, because of the new technologies coming up, people have to learn. Even Sivaram said, I don't have that much exposure and knowledge about that area. That means he's willing to learn that. So irrespective of age, everybody is a learner. It depends how much percentage devotion of time you do to that knowledge and that type of area of interest. So education is one, just a matter of time, and people have come up, and this will give you new opportunities to entire education system, starting from international universities and UGC. Government also come up with the new things. It is a very good chance to do, unlearn, relearn, and
So I hear that this is an opportunity, can be exploited as an opportunity. And I'll tell you one thing. If Sivaram goes for a loan, I'm going to fund it because I have full guarantee in getting that money back.
Yes.
So that income sharing model, if you are going for learning, you please give me a call, okay? I'm going to share some income out of that, okay? Okay, let me just quickly read through some questions here and see if we can take few questions before we conclude. So I think there was a question from Rakesh. He's asking what is the strategy of Poonawalla Finance? It's for Anup. In terms of contactless lending, so I think it's a COVID related question. So what's your strategy? What are you kind of doing about it? The whole contactless lending piece.
Okay, so traditionally what has happened that lending has always been a very touch and feel type of an industry. So over here right now, during COVID, what we are trying to do is that we have broken the entire customer journey into smaller parts. And therein where we are trying to see how we can automate and digitize all those processes so that there is a contactless lending and the entire digital journey from end to end can be over the channels, over the online way.
Okay. So basically, you are making. Sorry. So I'm just complete. I think you're saying that you're making investments, or you already made those investments to ensure that the digital journey is possibly end to end if the customer wishes to follow that journey. Because I'm sure there are people who want to still do the other traditional way. But if somebody wants to do it fully contactless and digital, you have that ability to put that up basically for the buyer, basically customer.
Yeah.
Okay.
Yes.
Awesome. There's another question, and I'll pose it to Anuj. How can it's from Mufad Dalal from Carix, is how can omni-channel automation lead to overall customer retention and process automation? And maybe you can maybe tweak the question a little bit if the meaning is not absolutely clear. And then there is a follow-on question as well from the same gentleman. Can lending on WhatsApp for business be the new norm, and how will this process to be taken by customers? So maybe this whole retention, channel automation, and process automation, and WhatsApp is kind of another channel through it. So Anuj, how do you respond to that?
Well, I think out of all the channels, I personally like WhatsApp as the best channel. You can obviously build automation and build workflows to, get leads from whatever channel you want. It could be from a phone call, it could be from Facebook, Twitter, and so on. And as long as you have well-defined workflows that take the lead, nurture the lead, push the lead forward into various processes, everything is fine. But I personally don't like to have many channels. I would like to, personally, I would like to just focus on one or two the most sticky channels. And I think WhatsApp is one of them, because even in our business, the kind of follow-ups we do, with the lead to convert that into a disbursal, the best conversion happens over WhatsApp because it's convenient for people. And WhatsApp itself is, piloting or rather developing, a lending feature in India. Apart from other guys, other lenders that are sort of bringing the entire loan application and disbursal journey on top of WhatsApp, because if you can sort of message on WhatsApp and respond, what is your name? My name is this. What is your PAN? My PAN is this. And they see the application form becomes a WhatsApp, conversation. Within, let's say, 30 seconds or 1 minute, you get you take the lead from lead to disbursal on WhatsApp. Then that's a great channel, and there is significant adoption, right? I don't have to say this, that WhatsApp is probably the biggest channel out there. So omni-channel, yes, you can build your systems for different channels if you want. I personally like to keep it simple and just focus on the most high value channels.
Got it. This is good. And I have another question, and I'll let Anup or Sivaram, Goutham, Anuj, any of you answer that. So Akash, he's from Yatra Online, he's the chief operating officer there on the B2B side. He has two questions. Is this a good time to lobby with the government to pass a law mandating a 138 settlement by courts in 3 months or less, with penalty being liquidation of assets of borrowers to pay the lender? Second, is the government giving genuine guarantee to lenders if their loans go bad, or is that announcement by the government an eyewash? And I'll repeat the question if you guys want.
Yeah, can you repeat the second part?
So the second part is the guarantee by the government looks like to be a genuine one, or is just an eyewash? I have a point of view there, so I'll just say that, because what I heard, from some borrowers trying to figure out this whole genuine guarantee piece from the government side, what I heard is that there are so many conditions before you can even sign. And I was talking to some lender at one point, and he was saying that, look, unless the lender tries his last beat in recovering the loan, meaning it is almost going to go to the court, is when the government will come and say, look, now I know this guy's not going to pay and I'm going to give you the money. So getting money from the government as a guarantee is, it's not an eyewash, but it is like so hard to get that it's the meaning of that is kind of almost lost, is what I heard. And I may be wrong, because this is a hearsay, because I'm not in the lending business myself. But what people are saying to me is that the lender has to produce enough documentation to prove that this guy is not paid, and I've taken all the effort to go to the courts to get the money back, and that sort of is a cross purpose to what the whole intent is, isn't it? Right. So that's the second part of the question.
I think it's quite a difficult question, and to be honest, I don't think that the government, it's just a personal view, I don't think the government should be in the business of bailing people out. Of course, this is a difficult situation. So if you're following the Supreme Court the issue regarding interest waiver during moratorium, right? At max, maybe the government can foot that bill to a certain extent, right? Because the banks are saying, and it's a very valid concern, banks are saying that if I don't charge interest during the moratorium, I also have a responsibility to my depositors.
Absolutely.
So to that extent, I think government may pitch in, just to cover the interest loss. But overall, creating schemes for lenders to bail them out as an ongoing process, that is not a good idea.
So Anuj, so I think the point is that the government is guaranteeing some piece. So government wants to give loans so that people can kickstart whatever business they had. So I think government is trying to say, look, if I give you money, you kickstart your business, and the life goes on for most people, right? In the intent, somebody doesn't return back, I'm willing to write it off, because this is the kind of this is like a stimulus measure, right? It's not like you are basically writing a blank check. It's a stimulus to let people go on with their lives so that they can earn a living, and and basically make some tax revenue for the government as well in the long run, right? So their government is giving guarantee. So the lender goes and says, look, because government gives me guarantee, I'm going to give you the loan. But the point is, the lender will have to break his head to get that money back. And that defeats the purpose, because then the lender says, look, I'm not going to take that crazy, problem on my head, because why do I do all this fighting to get this money back from the government? Because look, government has no good track record of paying money anyway for the thing they actually owe. So forget what they don't owe. Right. So I think it's an eyewash as far as I think in my view.
I think.
Yeah.
Yeah. No, please.
So what happens, Nilesh, is many times there are a lot of activities we do with a good intent, but there are a lot of manipulations which happen when things are being dealt at the ground level.
In the implementation, you are saying things may go wrong.
Right. So the government of India, they have implemented the scheme of CPT-MSE, which is Credit Guarantee Scheme, which is being given by the government of India, wherein the 75% of the total loans being given by eligible lending institutes, they can claim it back from the government. So over there, the government has given some guidelines. If the lender follows those guidelines, they can go and claim back. But the onus is on the lender to prove that he has followed those guidelines. One. Two, what happens is, if I would just like to give a corollary of education loan. Education loan is considered to be one of the most easily available loans. But if you speak to any private banker, the highest number of delinquency happens in education loans.
Correct.
Oh, is it? That's
when I came to know the first time, it was an eye opener for me. What are you saying? But that's the fact of the matter. That is why the education loan, even though the education loan is good for the people, it is priced higher because there is a risk return concept.
Got it.
So the point which I'm trying to make is that many times the things are done with a good intent, but at the end of the day, the onus is on the lender, because lender is the guy who is putting his balance sheet at stake. He is the guy who has to reply back to the stakeholders as well. So he is in the business of not only lending, he is the business of risk management.
Fair point. No, I think that's a fair point. I mean, I think you're right. I mean, the intent is one, and the implementation is another. But the point is, the implementation is, given the historical context of how you operate and dealt with government, the perception really is that, look, there is intent, but people are not going to take it. Meaning, and I'm sure there are some lenders who will do it, but I think the whole idea of stimulus going to the borrower, that if is not getting met, then what's the point of a stimulus? So in that context, it's not an eyewash, let's just say that, but it's not going to achieve its intended purpose. Let's just say that, maybe.
Just to take that point forward, just Nilesh, as I was mentioning earlier, that the COVID, the past 3 or 4 months may not be the right yardstick to actually gauge whether a customer is a good customer or a bad customer. Similarly, there are a couple of lenders who have come up with an emergency credit line to the existing customers. So that itself is an indication that good customers, they are not going to suffer. One. And two, even the moratorium which the government has allowed, they have allowed to the people who have been regular in making the payments as on 1st of March.
Okay.
So the people who were not regular earlier, they may not
they were not eligible for moratorium. Yeah, they thought COVID is going to happen, so they took moratorium before that.
Correct.
But look, even if education loans are most delinquent, Sivaram, my promise still stays. I'm still going to go for the income sharing. Anyway, so there's another question. This is for Anuj. Considering what was discussed on the moratorium, what is going to be the change in strategy for fintechs who cater to the low income segment in the space of personal loans to acquire customers? Like what's going to happen? Like, do they go after, like, do they follow the same charted path, or they kind of give it away? What's the deal? Like, what will be the new strategy?
I think one strategy would be to stop, which is a very unfortunate strategy. The other strategy could be to sort of embed yourself into the systems through which the blue collar workers do their jobs, right? So you could go to a payroll company, embed yourself into the payroll company, and sort of get some extra comfort through the payroll company, through the data the payroll company may have regarding the blue collar worker. But again, that is not foolproof. Unfortunate reality and unfortunate strategy is that in the near future, at least, I don't think this segment would have access to credit.
Okay. So look, I mean, I think it's right now, as Anup mentioned and Sivaram seconded, it's a question of survival for a lot of companies. So I think the focus should be really to make sure that the business is alive to see tomorrow, and do not take any undue risk, especially in segments which are anyway very, very difficult to collect money back. So I think I fully agree with that point. Now there is another point again, and it's on income sharing. Sorry, I have to bring it up. There's a company called Pesto Tech. What they're saying is that their experience in enforcing income sharing agreement has been very difficult. Has been hard to enforce. So how would collection work in such a scenario versus the traditional unsecured loan? Meaning, if you have income sharing, and honestly, it's a question I had when I heard first time, and this is about 3 months ago. I came to know about a company, and they are one of our customers who do income sharing pacts with the students. And I was thinking, who's going to pay? Like, and how do you get paid? What's the formula? Like, if you sign an agreement, like agreement has no value in this country anyway, right? So what do you do with that?
I think you got to work with some, you got to innovate on the transaction banking side. The people who created Aadhaar in this country, GST and so on, they've been trying to create e-lien as well, right? So there would be ways to put a lien on your account, right? I'm just thinking out loud right now, and I'm sure there will be other ways as well. But I think the only way to do this is to, be able to dip into the customers, into your student's bank account, right? And have some sort of an agreement that in case it's like any other, NACH collection, right? In case we are not able to recoup whatever we're supposed to get from
basically,
it would be a credit default. So, it would have to come under the purview of the credit bureaus, right? That's a additional step that we'll have to do. We have to have in this country, where such models come under the purview of the credit bureaus, so that any such delinquency, if you want to call them, can be reported to the credit bureau.
Okay. No, I think that's a tough question. I don't know if Anup, Goutham, Sivaram, if you have any point of view on what. Obviously, it's a very, very early area to even comment on, because I don't think there's any scientific way to recover money or even lend to somebody. But any point of view would be good to hear.
Yeah, I tend to agree with what Anuj has said in terms of having those robust processes coming in. But I think there's lots of education that needs to be done for these kind of structures itself, saying that such and such thing, such and such event happening, such and such is repercussion is going to happen. I think education is bigger. Awareness and repercussion, education on the repercussion side is critical there.
Okay. Yeah, I think I think this really has to see. I think some more discussions probably at the institutions level, which need to happen to really make it a product, because unless the collection is defined, lending is undefined. So it's kind of
Nilesh,
mathematical.
sorry to butt in here. I think what happens in most when we talk about designing the lending products, I think there's enough and more that gets into the capacity side of the capacity quotient of the repayment. I think intent is always a question mark. So I don't know what kind of tools the industry has, and what kind of tools are coming out to measure that. I think that's what is the.
I have an idea. You put cameras in the bar, and see how they behave there. And then you get to know whether they're going to pay or not.
Because things like I've heard some stories of social shaming and all those things, but I don't know. If you do I don't know where that will end, and will that be effective beyond a point? So I don't know. I think how does one work on intent?
True. People default on small loans like to friends, which are a few hundred rupees, to all industrialists, and large companies defaulting on thousands of crores. Right? Intent is hard, right? It's very, very hard, very, very hard. Good. Look, so I think I'll conclude now the session. I think we have taken some questions. So what we can do is we can go to the social lounge, and anybody who has a question can occupy a table on the social lounge and maybe ask questions to the speakers there. So really thank all the speakers here to coming on this call. I think we've just gone 30 minutes beyond our time, but I hope it was okay. Thank you, Anup. Thank you, Goutham. Thank you, Sivaram. Thank you, Anuj, for coming in. Really appreciate your time, and it was a great discussion, some new discoveries, and thank you all for joining this today. Thank you so much. I'll see you on the social lounge. Yeah.
Thank you.
Thank you.
Thank you.
Thank you, Nilesh. Thank you.